let's cut to the chase. I believe this software as a service company has the potential to return you in excess of 30% compounded for over a decade. Why I believe this? Well, let me explain. Hey value investors, how are you doing? My name is Stijn and welcome to my YouTube channel. Now let's get into it. Before I can tell you which software as a service company we are talking about, and before I explain why I believe this SaaS stock will explode over the upcoming decade, I want to first take a look at Facebook, or the company now known as Meta Platforms. Meta is one of those companies that has compounded insane amounts over a long ass time. Subsequently, I believe all value investors can learn from this corporation. After all, if you had invested in Facebook around the IPO, or preferably the months following the IPO, you'd have returned every single dollar invested into $16 today. Let me remind you, 16x your investment in just 10 years. So now we should try to find out which of the qualities that Facebook possessed are the qualities that have helped Facebook compound so greatly for such a long time. The first outside investor of Facebook, a certain man called Peter Thiel, describes these qualities in a lot of detail in his book 0 to 1. In my opinion, a must-read book. Some of these qualities are: first, think small before you start thinking big. Peter Thiel subscribes to the notion that you first need to dominate whatever sector you're operating in before you can think of expanding. Second, Peter Thiel also believes in disruption, specifically that true disruption is needed for mass adoption. This basically means that if a product is only 20% better, no one will buy it. For mass adoption, we need a 10x improvement over all the other alternatives. And lastly for now, owner orientation. Peter Thiel wants the goals of all the people inside of the company aligned. He wishes for everyone to have intrinsic motivation to turn the company into the best version it can be. So how can you align everyone's incentives? Well, according to Peter Thiel, the best way is to give the people equity. If employees get a huge chunk of their salaries paid out in shares of the company, you best believe that these people will want to increase the share price of the company as much as possible. This way of thinking is partly responsible for why Facebook has continued to outperform on the stock market for such a long time. And Peter Thiel, one of the important figures behind the Facebook culture, he is the co-founder of our software as a service company. He is the co-founder of Palantir. And Palantir needs little introduction. Palantir is a company which produces life-changing software. A big-time user of Palantir software is the US government. The US government has been using Palantir's platforms in excess of a decade already. Palantir started out dominating this small sector. They started out small. They started out trying to serve the US government as best as they possibly could. And they have succeeded in creating a product that's 10 times better than all the competition for that use case. They are expanding aggressively with both other governments as well as the commercial space. And that is a great opportunity for us investors. And the insane part is, I believe Palantir is truly undervalued. In the valuation model I'll show you in just a bit, we'll go through 3 main steps. Step 1, we'll try to predict how much net income Palantir will do a decade from today. Step 2, we'll give Palantir a value based on that future net income. We'll give Palantir a future value. And lastly, step 3, we'll assess just how much we're willing to pay for that future value today. So we'll start at the beginning, we'll start at step 1, let's predict the future net income. As we speak, Palantir is well on its way for $1.6 billion in revenue for the year 2021. I easily foresee Palantir grow their revenues at 45% for the next 5 years and 35% for the 5 years after that. And these growth rates would put them at a whopping $46 billion in revenue in the year 2031. Since Palantir is active as a software company, high net income margins are almost certain. I would be really surprised if we don't see a net income margin of more than 35% in the year 2031 for Palantir. So 35% of $46 billion in revenue in 2031 results in $16 billion of net income in 2031. So step 1 is now done. We have determined that Palantir should be able to do $16 billion of net income in the year 2031. Now, step 2, how much should Palantir be worth in the future? Currently, Palantir has roughly 2 billion shares outstanding. Let's assume they will dilute quite a bit more for the upcoming decade, 10% in this case. Now, we divide the future net income by the future shares outstanding, and that results in a future earnings per share or EPS of $7.32. And that number we can use to put a value on Palantir in 2031. We can use a PE ratio or a price to earnings ratio. By then, Palantir will still be a growth company, and by then they will have extremely high net income margins. Meaning, I think a P ratio of 30 is extremely fair in this case. $7.32 times 30 results in a future share price of roughly $220 per share in 2031. Awesome, step 2 is done. We have found that Palantir should be worth $220 per share in 2031. Lastly, step 3, what should we pay for Palantir today? I do not know about you guys, but I do not want to invest my money for over 10 years without getting a lot of profits in return. That is my opportunity cost. The cost I want to at least get for the next decade. And my opportunity cost is 15%. So if we discount $220 at 15% for over 10 years, that results in an intrinsic value today of roughly $55 per share. $55 per share results in a 15% return for 10 years, assuming zero risk. And of course, there is quite a bit of risk with Palantir, and that is completely fine, because we'll now apply a margin of safety. This is what ensures you and I get our attendees. And at the current share price of roughly $19 per share, we are getting a margin of safety of 65%. Certainly not bad at all. Meaning my projections can be off by 65% and we will still get a 15% return for the next decade. And that is why I believe Palantir is criminally undervalued today. This company has the potential to be worth more than 10 times as much in 2031. That is with an even more amazing 65% margin of safety. That is insane. For sure a great value proposition. And honestly, I am even more bullish than this specific valuation. I easily foresee Palantir trading at $300 per share before this decade ends. If you want to find out about a $300 per share valuation, definitely check out this video, the link will be in the description. That said, I really hope you guys enjoyed this video, and if you did, please give it a like and maybe even subscribe. Comment down below what you want to talk about next, and I'll see you guys in the next one. Peace.